Money Show.
Personal Finance with Warren Ingram.
So am I feeling fair or am I feeling mean? I think I'm feeling mean. Warren Ingram, it's Pay a Numbers game. The number is 133,230. What does it represent?
It's not my bank balance, that's for sure. I don't know.
It's the 1% of taxpayers who pay 29% of all personal income taxes in South Africa. Just 133,230 people earn enough to pay nearly a third of all personal income taxes. That's quite a scary low number, isn't it?
It's frightening. It's frightening because that's also the part of the population that is most vulnerable to immigration. And if that's a trend that continues, then that's a third of our tax base gone. And it's not good enough to say people just assume that if they leave, someone else will take their place, because they leave with intellectual property, liquid capital, and know-how and connections that can't just be replaced. So it's a frightening number.
Yeah, it is. It's a terrifying number. But anyway, listen, let's focus on the personal finance aspects of the budget speech in 2022. What leapt out at you other than no tax increases, no VAT increase, no fuel increases in terms of the road accident levy, and of course in terms of the levy on fuel? Some pretty good news in that front. A bit of a move in the tax brackets. There were a couple of positive things.
Absolutely, and I think it sounds like a strange one to start with, but to me the news on the drop in corporate tax rates is enormous. It's a huge piece of news. The actual amount that we're going to save, as taxpayers, isn't as big as one would think. But what I do believe is it sends an incredible signal that the mindset of the last 10 years before this, that business is the enemy, investing in shares and earning dividends and generating profits is a bad thing. I think that we're seeing that's in the past, and what we're seeing now is an understanding business is a partner, business is a creator of jobs, and business needs to be incentivized. And I think for me it was a huge signal. So I really enjoyed that. All of us, as in one form or another, are shareholders of businesses, whether we buy shares directly or we own them in our retirement funds. Somewhere along the line, we are going to benefit from this. And I think it's not the last drop we will see. So I think it's a very big signal and will be very well received by markets over time. Obviously, there are a few other issues going on now that detract from that.
Sure. But this isn't also, what's important here is this isn't the first time it's been mooted. Tito Mboweni mooted it and said, we're going to do it from 2022-23. And the fact that Iro Godongwana, under quite stiff pressure, has stuck with that promise is the strongest signal to my mind that this is a guy who's actually deadly serious about supporting the president's dream of a turnaround.
Absolutely, Bruce. And I also think, we need to look at this as a wider signal. This is not a personality-driven thing. I'm absolutely convinced that Tito Mboweni didn't come up with this policy on his own, and certainly wasn't endorsed, by cabinet on their own. I think that this is a big signal of a change in thinking, and the fact that the new finance minister, carries it on. To me, we should be very careful of attaching this, to individuals here, because it's telling us that on a broader level. Yes, there might be the radical economic transformation segment within the ANC, but there are clearly some market friendly, I almost want to say rational voices, but kind of taking hold there and moving policy in a good direction. And I think that's the signal for me. Out of this whole budget, there is some other good news. I'll get to that, but I do think that's. Signal-wise, we need to read the signals, and that wasn't just a smoke signal. That was a very clear shining light on our path forward.
Can I add to your signals? Just in listening to Dondo Mokgojane talking to us on the radio last night, I felt like I could have been speaking to the finance minister. The alignment is that strong. The script is that clear, and they're sticking to that same script.
Absolutely, and I think we'll see more action. I think the fact that, in theory, we're weeks away from the spectrum auction, that we're a couple of weeks longer away from seeding, rolling stock on railway lines, those are kind of unheard of. Not so much the broadband spectrum, but rolling stock on Transnet lines that are owned by private people, private companies. That's massive. And to hear the finance minister in a Q&A say, Eskom must consider and should actually sell power stations. If he actually did say that, I can't say I was sitting there to hear him say it, but that's what I've read. We're seeing a dramatic turnaround in policy, and I'm repeating the phrase. It's rational. Logic-driven policy rather than ideology, which sometimes to me just seems completely irrational. So I think I saw a video with you saying that this is, the summary of the budget is this was a great budget, and I couldn't agree more. Unfortunately, I hate agreeing with you, but we're there now. It is a great budget.
Again, under the circumstances, great budget. Under the circumstances, there's a caveat to everything. Now, talk to me about the good news bits that you did see in the budget. I've got a biggie, and I'm sure you'll pick up on it.
So the biggest sign for me is that we are seeing a further relaxation of exchange controls, and I want to start with that because people are going to say, but hang on, I can only still send out my 1 million a year travel or 10 million a year discretionary allowance, but in scale, where we've seen massive relaxation of exchange controls is the amendment to Regulation 28. Regulation 28 says, determines how much of our money we can invest locally and abroad in our retirement funds, how much we can invest in cash, bonds, property, etc. And the amendment there is to effectively increase our offshore allocation from 30% to 35%. And that might sound like a small number until you realize how big pension funds are. And so to give pension funds the capacity to increase that, again, using your phrase, under the circumstances, is a huge move. And I think it's again not going to be the last move. So for me, that is a biggie. That we suddenly getting in a position where if you add the Africa exposure, pension funds can invest 45% of their assets out of South Africa. Add in all the rand hedge shares on the JSE, and it's very possible that someone in a retirement fund in South Africa could have 50 or 70% of their assets effectively spread across the globe. And it sends a massive signal again, because it's not long ago that we were having to say on shows like this, prescribed assets is very likely not going to happen. It's a big kind of a smoke signal. That's not true. Don't worry about it. It's not going to happen. Here we are in a position where we don't have bad news of new exchange controls. What we've got is a relaxation. It's another major signal in a time where we need to take these signals seriously. And I think the other one for me would be the finance minister saying we're pretty much at the capacity of what we can tax our population, even the 1%ers. And in fact, what we need to do is, when we've got capacity, actually reduce tax rates for individuals as well. I think that was what I read between the lines.
Yep.
And understanding that we need to be more globally aligned. And I think that's another major signal.
There's also a quid pro quo, though. I don't want to get all misty and doughy-eyed over the fact that, yes, Regulation 28 has been relaxed in exchange controls. That's all brilliant. But there was one line in the speech which leapt out at me, and it was one about talking to the asset management industry about investing in infrastructure. This is not going to be compulsory. This isn't going to be in terms of prescribed assets, but it is a signal that government says, okay, you want more offshore exposure? Absolutely. But you scratch my back, I'll scratch yours. We need you to invest in infrastructure. And I've got no doubt that the asset management industry in South Africa will do it on favorable terms, but that is the sort of, I suppose, the payback of greater global exposure.
I take the point, and I'm not going to argue. I agree with you, but I think there needs to be a little bit of context to that, which is that there are lots of us, and I'm saying us because I'm one of those people that would absolutely love to invest in quality infrastructure in South Africa. I have no problem putting money into projects that will generate a good income. I can't think of anything more productive to me, for example, than putting my money into something which creates jobs, which actually multiplies the economic impact of the country, and at the same time is paying me 8 or 10% a year return. I think the pension funds are desperate for high quality income streams that they can use to pay their pensioners, and so they've been. This is not a one-way street. This is not just government sort of forcing it down their throat. What pension funds have been saying is, give us bankable projects, and that's the key phrase here. Give us bankable projects that we can co-invest in with you as government, or invest in our own. And we in infrastructure in our country, we would love to do it as long as we can see the merits of the projects and it's not just money down a black hole. And I think that that on its own could be another major big economic multiplier. So I see what you're saying, Bruce, but I'm going to maybe just choose to read it positively, because I think it was, we'll give you this and we'll give you that. It wasn't just we'll give you this, but we're going to take this away.
I concur. I do concur, but I just did see that as the quid pro quo. Before we move on to Ronald's question this evening, any more quick sort of upsides that you saw in the budget?
I think we just need to kind of fire a shot at the kind of perennial pessimists, that kind of pervade our country. Lots of P's in that sentence. And I feel we're in a position where constantly having to kind of remind people that don't make big, bad predictions about the future as if they're a certainty. I can't tell you how many times I heard people saying absolutely certain that we're going to have a VAT increase last year and this year. And I've mentioned the prescribed assets already, and so many people absolutely convinced that we were going to get, some kind of increase in personal tax rates. And then a couple of years ago, people saying, cash in your retirement funds, send all the money out because, your retirement funds are going to be nationalized in one form or another. You can't send money overseas. All of that's turned out to be garbage. And so just, again, I think be balanced in your views when you make these investment decisions. Read the budget speeches properly and understand them as a balance. They are balanced and they're going in the right direction for a change. And it's, 2 or 3 years of going in the right direction. That is no longer just a flash in the pan. That's a proper trend.
I suggested last night that the strongest signal I got from this budget is that the grown-ups are back in charge.
Absolutely, and I think we might have said it last week that the grown-ups have taken over the stock markets again overseas, and now the grown-ups in charge of Treasury. It feels like it's a good time to be a grown-up.
Wonderful. I'll do my best. We'll rely on you, though, for the rest of this evening, Warren Ingram. More with him in a moment. Ronald's sent us a question. Ronald's question is, worried about Ukraine, sensibly so, because it does have lots of knock-on consequences, not just in the third knockoff of the Russian stock market today, not just in a massive depreciation in the value of the ruble, but in the real world of commodity prices, which include oil, which include maize, which include wheat, because, of course, Ukraine is the bread basket of Europe. And that's going to push up the price of absolutely everything, including then inflation and interest rates and. So good question, Ronald. Pick up on that one with Warren in a moment.
The Money Show.
Personal Finance with Warren Ingram.
From Galileo Capital and our regular Thursday evening personal finance guru, Ronald's question is the news about the the invasion of Ukraine has got me thinking about my investments. I'm nervous that a war might break out. Well, it has. And I'm not sure what this means for my investments. I read that gold may be a good option. It was this morning. Et cetera, says Ronald. This conflict has got all kinds of permutations, Warren. How does Ronald and everybody else respond?
I think it's important to understand, the difference between kind of the human side and the real world side of this, and the way that markets will respond. So the human side and the human cost will be enormous, and that shouldn't be downplayed. But on the market side, the markets will tend to react to a shock, which in a funny way this is. I mean, I know it's been in the news for a long time, and we'll look back at this one day and say, well, gee, that was so predictable. Since 2014, we should have known this was coming. But for now, it is a shock to markets, and the way markets respond to shocks always is with a sense of panic, and that is really what we've seen. Big stock exchanges going down a lot, commodity prices rising, and I think the two things to understand here is that initial shock reaction could often be overdone. So we could see, if we just watch the rand, it was kind of flirting with below 15 just before the news, and suddenly we get the news of the invasion, and now the rand's flirting with 15 rand 50 to the dollar, and the real value of the rand in the next while will come through. It's certainly not right now. The market just is just reacting really emotionally. So I think if you're an investor in this space, just understand that these initial moves are surely not a signal of what the next 6 months or 2 or 3 years looks like. It's just a reaction right now. So don't make big moves in your investment decisions based on what you're seeing hour to hour, day to day, because this is not the future just yet. And so what markets will be doing is they're going to try and digest the information. Once they stop panicking, investors will start to look at this and say, what does it look like a bit further down the line? Is there really a sustained sort of damage to the infrastructure of the Ukraine that stops them producing, the food that Europe needs? Does that then cause, proper food inflation? I understand that the invasion is happening at the beginning of planting time. So this, this could be really bad for food prices. It might well be, inflationary across the world then. But again, we need to see that and before we make calculated decisions. So my advice to Ronald in a situation like this is just be really careful of kind of the big predictions now, because I think a lot of people will be making big forecasts because that it feels good to do that, and we'll trust them because they'll be giving us bad news, but we don't actually know the story. And for me,
we'll trust them because they give us bad news and they appeal to our biases. Absolutely, that's where it comes from. Yeah.
Yeah. So stay the course here. Don't, I saw in his question that he was saying he's considering stopping his contributions to investments. Don't do that, Ronald. I mean, the reality is markets are down. So, your contributions are going in and buying, high quality investments, I presume, but certainly at a lower price than they were
the
a week ago.
The NASDAQ is,
contributions.
I mean, people were saying, take all your money offshore, buy technology shares. It's like the future for technology. Look how incredible it is. And the NASDAQ, which is mostly technology companies, is now officially in a bear market, down 22% since November. So in 4 months, down 22%. Most powerful markets in the world, most powerful companies in the world, most charismatic leaders in the world. And those companies are down by 22% in 4 months. At some point, this becomes a buying opportunity. Not yet, but at some point it does. This is kind of a weird question that we've got this week in terms of, because I think we know, because we're South African, but I think you may have a different take on it. What is currency depreciation? It's when your currency falls on its face, but it's more complicated than that, is it?
Well, I think if we wanted the 30-second answer, that was actually the short, succinct explanation. It is actually when one currency loses value against another, and because we're South African, it's something that we are familiar with, and we get most often the quote is the rand versus the dollar. So when the rand is trading at 15 rand to the dollar, and it falls to 15.50. That is the very definition of currency depreciation in action, and as we can see, that it happens either very quickly in response to a particular event, or it might happen much more gradually. And so when people ask, what will the rand do against the dollar, the US dollar over the next decade, the trick there is you can't make big economic or political predictions because you just don't know what's going to happen. But what you can do is you can say, well, if the inflation rate in South Africa is higher than in the inflation rate in the US, and in a normal course, that's exactly what happens. Not right now, of course, the Americans are struggling with inflation. But if that sustains itself, that the rand or the inflation rate in South Africa is higher than America, then you know that the rand will lose value against the US dollar by at least that difference in inflation rates. If, however, we get to a situation where Americans suddenly have inflation that's much higher than ours over a long period of time, there's a very good argument that the economists will start to say, well, that actually tells you that there is a good chance that the dollar starts to weaken against the rand, which sounds unbelievable, but it could happen.
Imagine.
In which case they have a currency depreciation problem.
And if you are still unclear on what currency depreciation is, go and Google dollar ruble, and you'll find graphs which show you what happens when your loony president invades a neighbor and you lose a third of your value of your currency in a single day. It's dramatic. It really is. Warren Ingram, personal financial advisor, executive director at Galileo Capital. Thank you very much.